All right, folks, in this video, I'm going to be talking about the third candle draw. You probably heard me mention it before. It's one of my favorite signatures in price action, and it repeats on a consistent basis, and I'm going to show you how you can capitalize on it. So we're going to go over a few different examples here, because the thing is about third candle draw, the highest probability conditions, there are certain things taking place, and I'm going to show you those conditions because a big issue with anything is, a lot of traders, they just want like one little rinky dink pattern that they can go in at any time. It doesn't matter the context or nothing. They just want one little rinky dink pattern to trade. And there's the context that builds it. And I'm going to give you that context here in this video and how to connect that with third candle draw to build a trading plan. Because it's useful for bias, just framing your setups off of. It's a really good signature. It's a really powerful signature, and I'm going to show you what to look for here. I'm going to use ES from Friday here. There's no hindsight here. I plugged this in Discord, was talking about this on mic with my mentees. And I know it's futures, right? But Mike, I thought you're a Forex trader. I am, but I do look at futures as well, mainly for like my mentees. I have some mentees that trade futures, so I'll talk about that on mic as well with my mentees. Just for them, because it's the same signatures in price action. Same signatures in futures, same signatures in Forex. So we're going to go over this example, and I'll do some Forex as well. I'll go over some Forex examples as well. So when we're talking about third candle draw, number one, you need a swing point. You need a swing point. Swing highs, swing lows. In this example, we have a swing high level. Look, follow my cursor. Highest high in the middle, lower high on the left, lower high on the right. That's a swing high. Third candle draw, when it's a swing high, is going to be the third candle low right there. Look at my cursor. Let me actually go to replay real quick. It's going to be the low of that third candle. That is going to serve as a very powerful magnet, for price action. Okay. But again, as I said at the beginning, there's the context behind it that you got to consider though. So here's that context, because it ain't just because here's the thing with third candle draw, swing point, your objective is you want to see it clean that out. That's that magnet. You want to see that gives you a bias to work with. Price is going to gravitate to that low right there. But there is some other things that you got to consider. You'll get better results with third candle draw if it's a swing high level, in this case, being if it's in a premium, which it is. It's in a premium. And if it has recently taken out a big liquidity pull, and that's the big one here. That's the big thing. If you want the best results, you want to see that swing point coming off of major liquidity, which it is. Because if you look to your left, you see how that took out this right here, which also happens to be weekly buy side. So that took out major liquidity right there. Look, that's a weekly buy side liquidity that it's coming up off of. See what I mean? That's a big level that it pierced right there. So you're taking out a big level of liquidity, weekly buy side liquidity, and then you put in a swing high level. Because you got to think, folks, that every single price swing that you see on this chart, it originates from what? Every single one of them. It originates from a swing point. That big push up right there that you see where my cursor's moving, that originated from a swing point. That big push lower that you see right there originated from a swing point. But it needs the liquidity to fuel it. So what price did was it came up and it cleaned out weekly buy side liquidity right there. A big level. And then it puts in this swing point while being in a premium marketplace, an expensive marketplace. It puts in a swing point, a swing high. Third candle, draw right there, the low of that swing point. Because here's the thing, you're early. You're early to the move. And that third candle, I'm telling you, it's going to be a powerful magnet for price. And the win rate that you get with this, if you have the criteria that I'm telling you here, is insane. It's insane. Okay. Now here's some more context. Because again, I don't want to be one of these videos where I don't give you any type of context or nothing behind it. I don't want to, because I know a lot of people on YouTube, they do that. They'll give you like one little rinky-dink pattern, but they don't give you like any details behind it. They don't tell you how to trade it or nothing. They'll give you like some like little quick 5-minute video with no context, nothing behind it. I don't do that over here. So my videos, they're a little bit longer. They're a little bit longer. They're a little bit more to them. But that's because I'm giving you more details on how to actually trade this stuff, how to actually frame my idea behind this stuff. Okay? So bear with me, because it might be a little bit of a longer video, like a lot of my videos are, right? But I'm giving you the how to actually trade this. I'm giving you the actual details on how to navigate this, how to actually make money with this stuff. All right? So third candle draw. Again, if it's a swing high, it's going to be the low of that third candle, the swing point. If it's a swing low, for example, look right here, just for the case. And I know it's just like there's the context behind it, but swing low, it's going to be the high of the third candle. And you're going to look to run out these levels. So I have that right there. But when I was talking with my mentees today, or not today, but on Friday, we had established that, okay, it's going to want to take care of that, but it's going to need to do something else first. And what's that? Because here's what you need to understand, that each and every single candle tells you a story. Each and every single candle holds information. So I know I have that third candle draw right there, but it also failed to displace beneath this and this. What's that and that? Well, that is the previous daily low. So that failed to displace right there beneath Wednesday's lows. Look at my cursor. It couldn't do it. And if you look very closely, you actually got daily sell side right there taken. And somebody might be like, okay, then doesn't that kind of concern you though, that it's going to ramp back up then? It took out daily sell side, and that a big level. And then that right there, it's a pretty decent level, yeah. But look what it took out up here. That's a bigger liquidity pool than that, is it not? It sure is. So compare and contrast. You're taking out a weekly buy side liquidity pool versus a daily sell side liquidity pool while being in a premium marketplace. That's going to win, because that's a bigger liquidity. And what has more liquidity is going to have more of a say in where price is going to go. So, but because it did take out daily sell side there where my cursor's pointing and liquidity there, and it respected it, it failed to displace. And again, I talked about this, by the way, in my daily bias video, which is, the video before this that I plugged. You want to watch that as well. That's going to really connect real nicely to this, what I'm telling you right here. Because it failed to displace beneath that and that, I understand that it's probably going to need more fuel before it can make the trip down to this. Let me say that again. Because it failed to displace beneath that where my cursor's pointing, and that right there, that sell side, it couldn't clear it in the one go. It's going to need more fuel. It's going to need more liquidity before it can make the trip down into that low right there where my cursor is now pointing. I like to use the gas station analogy. Like, think about it like this. Like, you have a destination that you want to reach, but your tank's on empty. So you got to do what? You got to go to the gas station. You got to get some gas. Price has the destination it wants to reach, and that's the third candle draw right there where my cursor's pointing, that swing point. That third candle, that swing point's a very powerful magnet for price. But as we understand, like, price isn't like a straight line lower. It ain't quite that easy, right? It ain't quite that easy. Price is going to gyrate. It's going to gyrate from liquidity to liquidity. So the third candle, that just gives us the direction. It's a very easy, simple way to establish where price is going to want to go. Third candle draw, that's what it is. But because it failed to displace beneath this and this, that tells me it needs more fuel before it can make the trip down into this. So where's that fuel going to be? This is where we do top-down analysis. All right, this is where we do top-down analysis and we form that game plan. That's what I do every single morning. Is I go from the daily, the 4 hour, the 1 hour, and I work my way down to each and every single time frame. And that's what we're going to do here. And I'm going to tell you how to form a game plan on this, because I did this real time on mic. I know it kind of looks like I'm going in here hindsight and market replay like a lot of people on YouTube do, but 100% called real time. This entire game plan. So because it needs more fuel, go to your 4 hour. So you also need to consider where Asian session highs is at as well. But I want you to look at this chart. What did this do? Because here's that liquidity. Look at my cursor. That was the liquidity that it took out. It took out a lot of liquidity right there, folks. It's curling up. So you see how it doesn't really have the fuel to take care of that right now? It needs to do what? It needs more liquidity. So what does it do? What does it do, folks? It creates it. You see that's higher time frame buy side, is it not? It sure is. There's a swing point in there. That's higher time frame buy side right there. So what price does is it creates in, if what you'll notice is you also have what in here? You also have Asian session highs in here. Asian session begins 7 p.m. Eastern time and it goes into midnight. So 19 to midnight. So we have, again, remember, now we're on a 4 hour, and that's the destination that you want to reach, which is the third candle draw. It's a powerful magnet for price. Powerful. But it needs more fuel, so price creates that fuel. So what you could do to frame a setup is you have a destination, but you need liquidity taken. So if you have, like, for example, higher time frame sell side being taken out in here, of course, what you do, look for higher time frame buy side or Asian session highs, or you need a big liquidity pool taken first before you frame your move down to that low. And that's what happens here. You see how it pierces that? That fuels to move down into that. That's the gas. You know, I was just saying a second ago about that gas station, right? You got to stop at the gas station. You have a destination, but you're running on empty. So price has to come up here, go to the gas station. And that liquidity right there, the Asian session highs, the higher time frame buy side, that's the gas. It fills up the tank. So now it has more fuel to reach our destination, which is the third candle draw down below. And then that is where you can go in and you can frame your setups off that. That's where you can, like, frame your market structure shift setups off that and then aim for that low. Or you could look for your candle confirmation setups down into that low. For folks that don't know what candle confirmation is, it's like my personal trading model. Really powerful trading model. And I'll actually leave a link to that trading model in the video description below if you want to learn more about that. It's, you know, an amazing model. But that's where you could look for your setups, because you know you have a draw down here, third candle draw, that is powerful draw, and you could look for setups all the way down into that draw. I'm not saying it can exceed that, but that's where your best setups will be down into that. And then you could look to just scalp it, or if you want, you could write it down there. You could scalp it, whatever you want to do with it, whatever your strategy is. You could look for setups down into that draw and then just piggyback this thing down into it. You see? And the other day, we actually had it on NASDAQ too. See what I mean? You had like a similar deal on NASDAQ, but it was a little bit farther back. Like, it came up recently. You see the price is curling up right here. It's clearly overall bullish, but it cleaned out buy side liquidity right there where my cursor's pointing. Buy side liquidity right there where my cursor's pointing. And then it put in this swing point. So our third candle draw is where? It's right there, the low of that third candle. See that? Right there where my cursor's pointing. That's third candle draw right there. So we know price is going to gravitate to that. And yet again, I want you to notice something happening here. So you have that drawdown below, but you notice what it's coming off of. You remember like a second ago on NASDAQ when we were going over that? Or ES when we were going over that. You notice how like it didn't have that fuel. It didn't have like that liquidity. But you notice this does. This is coming off of higher time frame buy side right there. Look. See that? So does it really need, another higher time frame buy side liquidity pool if it only has it right there? No, it has it. Look. So you have third candle drawdown below, and what happened was it has this liquidity to fuel the move down to do that. You see? So really price shouldn't exceed that. It shouldn't exceed that at this point. It has third candle drawdown below. It has higher time frame buy side to fuel that push lower. It's in a premium. Remember, on the daily chart, it's in a premium. And you see that? So what happens is price ends up coming back up into a premium because I'm on a 1 hour now. Again, I want you to kind of follow where my cursor is. We were just on a 4 hour chart. And you remember how on that 4 hour chart, how they took out higher time frame buy side? And I just told you, like, it had that fuel. Like, again, think the gas station analogy that I was just telling you. It already has the necessary fuel. You have your drawdown here, which is the third candle draw that I was just telling you about. You know it. You got direction for it. The third candle draw is where my cursor's now moving down here. And then right there's higher time frame buy side. We pressed out that higher time frame buy side right there where my cursor is pointing. So that fuels that push lower. It comes down here. What's it doing? It's selling off, right? Follow my cursor. Selling off, selling off, selling off, selling off. But it's back down to what? It's back down to a discount. And you remember I was just telling you a second ago how it shouldn't exceed that up there where my cursor is pointing. It shouldn't exceed that because it only has higher time frame buy side. But now you have a new lower time frame dealing range on your 1 hour here. And you see how price comes up to a premium? So you see how you can kind of like, you can frame setups off of this because you know where your direction is. It's down there. And then you can utilize just like dealing ranges, like premium and discount to then frame setups around that. So you see how price comes up here into a premium here into a New York session. And you know, because you got your drawdown there still intact, you can frame setups up here in this area down into that draw. That's where you can go in again and look for like your market structure shift deals. You can look for your candle confirmation deals. And then you can look to piggyback this down into that low down there. You see like price came up right there at 930, which is equity bell. You see how like it pressed up, turtle soup deal, back up into a premium. But because you got that drawdown there, what do you understand about that? That's not going to be sustained, right? Because you got your drawdown there, third candle drawdown there, and then it folds. So my point is, like whatever your strategy is, whatever that is, whether it be market structure shifts, whether you do like ICT 2022, whether you do like candle confirmation, understanding that you got that third candle drawdown there, and then that's your magnet. That's the most important thing I'm trying to get across here. But then you can utilize liquidity, like do top-down analysis, like your 4 hour, your 1 hour, utilize dealing ranges, premium and discount, because we just established that it's up in a premium. And you can then, that all comes together, that all blends together to give you a trading idea to frame your setups around. So it's not just like, oh, one little rinky-dink pattern. It's this, do this one thing, and then you're going to become a billionaire, right? No, that's not trading. That's not how trading works, folks. It'd be easier for me to just make like some little rinky-dink 5-minute video and not give you any context behind it like most people on YouTube, because that's what's hit the clicks, because nobody has any fucking attention span, right? But this is what you need to do. This is what you need to do, and this is what's going to frame that setup for you. Third candle draw is so powerful, but it just gives you the direction. You still got to understand liquidity, premium and discount, and then you can like frame your setups around that. See what I mean? And just to give you an example with Forex as well. So you have UJ right here. And again, folks, like I'm using a daily chart here, but you can use this on a 4 hour, a 1 hour, a 15-minute. Price is fractal, remember? So you could take like the same thought process I'm using right here, like on this higher time frame, and just go to a lower time frame, and you'll see the same patterns, the same signatures play out. But you see like right there, third candle draw. For a bullish scenario, because I used bearish scenarios a second ago. Here's a bullish scenario. Lowest low in the middle, where my cursor's pointing. You go by the absolute low, not the body close. Absolute low, right there. Higher low on the left, higher low on the right. Those two candles on the left and the right are higher than that one. So then your focus, once that closes, goes to that high right there, where my cursor's pointing. That's third candle draw. On a bullish scenario, it is the high of that third candle that forms that price swing. Also notice that it's in a discount marketplace. It's cheap. So that gives you a bias. That gives you direction. Okay, it's very simple to establish. Okay, it's probably going up to that high right there. It's probably going to that third candle. That's why I call it the third candle draw. But, you kind of remember what I just told you a second ago. That's just one part of it. That's one step of it. That gives you direction. And again, that's like the, one of the, like the most important things here. One of the most important things there, in regards to reading the chart is, where is the direction? I've said it many, many times. Understanding where price is going is way more important than having the perfect entry. Just understanding where price is going in regards to technical analysis, that's the more important part of it. And that's what I'm showing you with third candle draw. But what I just tell you a second ago as well, you see like what it did right here? You see how price came up right there? And you see how it took out that liquidity, but it failed to displace. It's still bullish, but it's going to need to pick up more fuel. So you see where that candle opens right here? Look at my cursor. It opens, and then it comes down. When it comes down right there, what it's doing, it's getting that fuel. And when it does that, that's when it does its manipulation run. Or if you're like an SMC trader, what you understand is like a Judas swing. That's when it does it. So that gives you the direction. It opens up right here, and then it comes down, and it collects that fuel. Now let's go to a 4 hour chart where we can identify it a little bit better. So you see right here, follow my cursor. You see how that came up right there and it cleaned out that high? That was what I was just showing you on that daily chart. It's just on a 4 hour chart now. So you see how it cleaned out the liquidity above that high, and it failed to displace on the daily. You You see how it did on the 4 hour right there, how it pierced it and it pulled back off of it. So what does it need to do? It needs to take a breather. It needs to collect liquidity. You have higher time frame sell side right there. You see that? Also notice like it pulls back into a discount, because you take your Fibonacci from this low to that high, that's a Dillon range. You see how it like comes down to a discount, and it takes a higher time frame sell side and a discount. So we understand it shouldn't exceed that because it already moved down to a cheap marketplace. Remember, now you have a third candle up there where my cursor's pointing, and it has more fuel now. And you notice like when we come into Tuesday, because here's Tuesday, you know, you see like here's midnight on Tuesday. You see what it does in London right there? It comes down, and what do you got right there? You got Asian session lows, remember? Now, that was that previous low that was put in. Look at my cursor. That was that previous move lower. Remember, here, kind of like, because I know that it's easy to get lost in this price action, but let me take it a step back. Right there, look at my cursor. That's where it initially came up and took out that higher time frame buy side. They were just talking about like on that daily that failed to displace, the 4 hour that failed to displace. So we had to come down here, look at my cursor, and it took out higher time frame sell side right there. It's just on the 1 hour chart now, but that's the same level right there. It took care of that right there. And then that's where it also came down to a discount within that range. So it has more fuel now. So you remember how we were saying, because it pulled back into a discount and took out higher time frame sell side, it shouldn't exceed that now. Or I mean, it shouldn't exceed this right here, my mistake right here. What it does is it pushes up off that. And then what does it do right there? That's Asian session lows. Remember, it begins at 19, ends at midnight. So see like how it creates Asian session lows right there. And then what happens on Tuesday, we come down in London, takes care of that, Judas swing. And then this is what I was saying, like you can frame your setups around that. So then this is where you can go in, because this is within my London kill zone. Right here, London kill zone. And then you can go in and you can frame setups around that, because you understand that you have a magnet up there where my cursor's pointing. You have a draw on liquidity up here, being the third candle draw. You see what I'm getting at? Like it gives you direction. It gives you a bias to work with, a powerful magnet draw and price. And then your setups are just going to be just so much more. Your setups are just going to be so flawless up into that draw. Because where a lot of traders get in trouble is they don't have that draw established. They don't have that direction established. They'll look for like market structure shift deals or candle confirmation deals or whatever you trade. And then they'll get caught in reversal and reversal and reversal, take loss after loss after loss because they don't have that draw established. That draw's gone. And I've always recommended third candle draw for a beginner because it's just so simple. You don't get as many setups, but it's so simple. It's so high probability when you have the criteria that I'm telling you here. And then your setups up into that third candle draw are just so flawless. It's just so flawless. And you see how it came down right there, Asian session lows cleaned out. Again, that's where you can go in, look for like your market structure shift deals off these levels, your candle confirmation deals, piggybacking it up into that draw. Everything, whatever you do, whatever you trade, when you implement the third candle draw, you're going to get so much better results. So you see like what happens? That was your Judas swing right there in London. And then it has like your shift in here. That's your shift. And then you can just piggyback this up. Look, as I said, candle confirmation deals, whatever you trade, all the way up into your third candle draw magnet right there. And that's how you do it. That's what third candle draw is, folks. If it's a swing low, which is a bullish third candle draw, it'll be the high of that third candle in the price swing. If it's a swing high, it's the low of the third candle in the price swing. That's simple. That's what it is. And again, for the best results, when we're talking about third candle draw, for the best results, you want to see that third candle draw preferably put in off of a big level of liquidity. So as I just said a second ago, like I was illustrating with NASDAQ, that took out weekly bias liquidity in there. Here, let me clean this up. As I was just showing you a second ago, that was taking out a weekly bias liquidity in there. Like that's a weekly swing point. Oh, I was thinking of ES, but it's the same thing on NASDAQ too. It was the same thing. It took out weekly bias in there, daily bias in there. And you see how it was curling up into that, it took it out, and it puts in that swing point off all that liquidity. So it has all that liquidity to fuel that swing point, the fuel that push lower. It's in a premium, third candle draw. As a result, has flawless follow through. And ES, same deal, came up, took out major liquidity, third candle draw, flawless follow through. And of course, for a bullish scenario, like right there, look, USD CHF, same thing, look, low cleaned out, discount, third candle draw, pressed out. See that? So if it's a bullish scenario, it takes out significant sell side down below. It's in a discount, third candle draw, clean follow through. And that's what you do. That's what it is. If you enjoyed this video, make sure you leave a like on it, subscribe to the channel, and I will keep the content coming.